7, 6, 5, 4, 3, 2, 1.
Man, Hello? Every time that music in the intro comes, I feel like I'm famous. It made me feel so important.
You know what's so funny? It's so with like editing and film and all kind of stuff, I'm like, it doesn't go fully all the way down. It kind of goes down and then it kind of boom right there. And I'm like, I just need a little bit more of that downward trend. But just me being picky about stuff.
Downward trends. Tell me about downward trends.
Oh, actually, oh wow. Look at that segment. All right, so I'm gonna share my screen fast and show you this. So give you kind of a visual understanding of where the market was. And mind you, we're looking at March. So last month, 2020, but it gives you at least an idea of kind of where the market was. As you kind of see in 2010, we were looking at kind of the peak right there. And that was about 17,000. So the blue mark is attached properties. Well, the yellow mark is detached properties. So in that kind of 2011 timeframe, we were looking at about 17,000 worth of inventory on the market. Now, if you jump back to March, basically last month, what does that put you at? Puts you about like 4,500 of inventory. I mean, I know we talked about it on the last podcast of inventory, but I mean, going in, and I don't have a slide for it, properties are still selling. And this is one of the big indicators why. We just don't have a lot of inventory for the market.
Yeah, I mean, that level of inventory is lower than the lowrider in Barrio Logan. It's so low. That is, it's just, and you look at this chart and you think about it, you're like, well, wait a minute. It kind of looks like inventory has been on a downward trend over the years. But if you think about it, a lot of people that bought houses as you go back the years are now realizing, wait a minute, I'm sitting on a gold mine here. I made a lot of money the last couple of years from buying real estate. Maybe I should sit a little bit longer and see what happens. I mean, what do you think about that?
Well, yeah, I mean, right now, I think the uncertainty of putting the property in the market is one thing that's really factoring in. I know the last couple of years, you know, especially in areas that are kind of were being gentrified, you see the pricing that's happening in those communities, and you go, oh, my neighbor got this value. Oh my gosh, I didn't realize my property is worth $50,000 more. Okay, I'm going to sell my property. But you have to have a property to move to. With rates as low as they've been, it's kind of helped people adjust to kind of move up buyers. The difficult part about it is people that are thinking about listing their property, unless they're moving out of California, where are they going to go to next? And we're just not getting the inventory. We're getting the influx of people that want to buy, yet we're not getting the inventory out there for them to purchase.
Well, I mean, you can look at it with the rates so low. Like we're looking at rates at 3% to let's say 3.25% on 30-year fixed, and FHA and VA is even more ridiculous. That's down. That's going between 2.75 to like 3.125%, which is ridiculously low. But even with the rates that low, you go, I want to move into this neighborhood. I want to live here. But from your graph, those people that live in those neighborhoods, they're not selling their homes. And when they do sell them, they're selling them for top dollar because they don't know where to move to. Like, where are you going to move?
Yeah, I mean, talk us about rates, because I know I've been getting bombarded by lenders telling me rates have actually just jumped down, at least in the 700 and under.
So this week we finally got a little bit of an adjustment. Things finally dropped back down. You finally saw, I would say, a little bit of the money of the Fed buying mortgage-backed securities and basically loosening up mortgages. But the other thing that you really want to say is, why are rates getting a little bit lower? It's pretty simple. All the mortgages that were done 30 days ago are now getting funded, which means lenders' money is being freed up so they can lend money again. Is there still a problem? a liquidity crisis, which is what you may hear on financial networks, yes, that is still kind of a crisis. But at the same time, we've already made lending harder. FICO score has gone up. So your average FHA now used to be like 580 we lent to. Now majority of us are at like 660. That's kind of rough. I mean, that's big. And then we also used to have small itty bitty amount of reserves needed. We now want more. So some people got pushed out too. So you're right. Even though the rates are lower, the lending is harder, and it's harder for buyers to get in there and do stuff. And I think that's going to continue over the next couple of months because I'm just kidding. That's not for real. That was fake. I don't think this thing's going to clear up overnight. So I think lending is going to be harder for the couple months, going up ahead. Kind of tough.
Can you walk me through and walk our listeners through basically jumbo loans? Because I know we've had difficulties of those. Some of the jumbo loans not funding.
Ooh, so this is interesting. For those of you who have heard of this website called Google, you can actually use it and look up jumbo lenders and see that some of them are actually not taking applications, not even lending money. And you only have so many bigger players left in the market, and they only want to lend to you if you have a 740 FICO or up, you got your 6 to 12 months of reserves, and you're pretty much a perfect file. If you're self-employed right now getting jumbo, you're going to need a lot of extra paperwork. That's a bummer, but there is people lending on jumbo. Wells Fargo's backed out on a lot of it. Chase is backed out on a lot. B of A's backed out on a lot. Union Bank is still running fully solid, but unfortunately, Union Bank can sometimes be kind of painful to deal with from a lending perspective. I don't want to hurt myself, but Union Bank can be painful. So there's some people still lending. It's just harder. And it's a bummer because you may find people out there that have a 700 FICO score, make good money, and have, let's say, 25% to put down, and they can't get a good jumbo loan anymore at what's considered a really good rate.
One thing that's going to be happening, I've been seeing it more, and we haven't put any offers like this in, but one thing we're probably going to start seeing is seller financing.
I think so.
So that's to be aware about. If you're looking to purchase and your situation is a little unique, might be something to talk to with your lender and your realtor about seller financing on a purchase. So I mean, it's going to be based off of probably more unique property, more of a high price point property, because again, properties under that 700, 650, under that price point are still selling fairly fast, especially if it's a shiny object, if it's upgraded. If it's a higher price point, not selling as fast, so that's probably going to be the price point that you have to be looking at for seller financing.
The other thing that you haven't seen in a long time, caveat to that, is going to be people assuming other people's mortgages. So you'll find savvy realtor like yourself, you may find somebody and go, hey, we can't really get a good loan on this property, but the current owner has, let's say, 3.5. You can let the new buyer assume the loan, and they can take their down payment they were going to give to the bank. They give it to the owner of the home, and that's how those deals close, because some people may not be able to get good financing right now. And assumable loans on a listing could be worth its weight in gold right now, because a lot of people have good loans on their homes they got the last couple of years. It's probably pretty good. So your savvier agents may start looking at places and going, well, is the loan assumable? How can we make this work?
Well, let's finish on. We got less than a minute left. So we're going to be doing these updates Monday through Friday at 4 p.m. Pacific. Also, tomorrow we are going to be doing another buyer seminar. We had a lot of feedback, a lot of positive feedback on that. We're looking to make it more interactive. So if you are watching, feel free to give back, comment, and we'll kind of dive deeper. We're going to be switching it up too. Not every week's going to be first-time home buyers. We're also going to do investor seminars. We're going to do move-up buyers, downsizing, a lot of different variations of the process of purchasing and selling.
And there's no dumb question. So if you got questions and you think they're silly, they're not, hit us up with them. And we're happy.
Throwing that out there. So I had on the podcast the other day, someone told me, he goes, if you want a great answer, ask a great questions. but there are no questions.
That is the bet. That's the CEO question, my friend.
All right, guys. Thank you. On to the next one. See you tomorrow.
Bye.